Good morning, ladies and gentlemen. My name is Greg Mikulowski. I'm going to take a look at some of the major currency pairs from a technical perspective. To start your trading week, we'll start with the euro versus US dollar. If we take a look at the price action really over the last 1, 2, 3, 4, 5 trading days, we've been up and down, up and down, up and down, up and down. What has stuck out in my mind is this ceiling up here near the 50% retracement of the move down from the June 27 high to the July 14th low. That ceiling comes between 1.0268 and the 50% retracement at 1.0272 or 1.02829. The high price last week reached 1.02773. We need to get above that level to give the bias more of a bullish bias here in the euro versus US dollar. If we can't get above that level, then there's some problem in Mudville for the currency pair. There is some hope, though, however, in trading today, is in that the price tried to trade below the 100-hour moving average in the Asian session, moved a little bit above it here, but then fell back below that level. When we broke above it and came back down to test it, you can see it sort of closely here. I'll kind of zoom in there. You can see how the price found support ahead of that 100-hour moving average and started to move back to the upside. There is this swing area through here that is also providing some support. So the buyers are trying, but they need to get above the 50% retracement in order to push this pair further to the upside and restart, I guess, the bullish momentum that started after the price fell below the parity level, moving down to 99.51 last week or the week before, and starting this move to the upside. But work to do here if the buyers are to take more control. Let's take a look at the dollar versus yen next. And what we saw on Friday in the dollar versus yen is a very sharp move to the downside. It was the biggest mover on Friday, and it got its go ahead when the price moved up in the Asian session, moved up to test the 200-hour moving average and just below the 100-hour moving average, which was just above that 200-hour moving average, and sellers leaned against that level and pushed the price to the downside. We also fell below this trend line here, which was a bearish development, but the price was already oversold on the day, and we saw a rebound move back to the upside and reestablishment of this trend line, which is somewhat important. Okay, and in trading here today, the price moved higher and then actually dipped below that level. If you look very closely here, dipped below that level, but could not keep momentum going once again, and the price moved back above that level and is trading higher. We're also above this swing area, which has a swing high, a fail break here, and then a run above that level and a retest of those old swing highs through here. So that was a key level, and we fell below that level on Friday. And in trading today, we tried to move above it here, failed, came down, tested the trend line again, and then moved up. Tried to hold resistance right here against the swing level, couldn't do it, broke above it. So right now we're a little bit more bullish here for the dollar versus yen. Need to stay above this 136, 38 or 38 level to keep the buyers in control. That's the low of this swing area right here. As long as that can happen, we could see a rotation toward the 137 level, which was a low here and also a high right here. So somewhat important level and natural resistance level. And then we'd start to look toward the 100-hour moving average. So dollar versus yen is trying to rebound after Friday's sharp declines, and we also had a decline on Thursday as well in trading, pushing this pair to the downside. Let's also put a Fibonacci here, see where that comes in, just for giggles here. Oh, look, the 38.2% retracement of this move down comes in at 137.01, increasing this level's importance, folks. If the price goes up to the 137 level and can't extend above that level, look for, this could be a correction in what is the start of a bearish market here in that currency pair. So key level at 137. Keep that in mind. Let's take a look at the sterling versus US dollar. We saw a big move to the upside here in the European session in that pair, which took the price back above the 50% retracement. If you recall, on Friday, the price moved above that 50% retracement only to fail. So this is a second attempt above the 50%. If we can stay above that level, that gives more of a bullish bias here for that currency pair. Watching the 1.20326 as well on the downside for support. Now that's the low of this swing area, swing low right here, swing high right here, failed break here, swing highs, swing highs, swing highs, swing highs, swing highs, failed break here, reestablish the level there, and now moving up. So watch this yellow area on the downside for your close risk. As long as we stay above the 50% and this lower swing area, the bias remains more to the upside from a technical perspective. Let's take a look at the dollar versus Canada. Dollar versus Canada. We came down, tested the low price from this level back in June 28th, found support buyers against that, so double bottom right there, completed the lap to the upside and downside, and then started to take away other swing areas, this swing area right here, and also this swing area through here, and on its way above the 100-hour moving average. And then in trading today, we moved above another swing area here, but fell short of the falling 200-hour moving average, and so we this is like the little engine that couldn't get above that level, and we started to erode and break down below levels, break down below the 100, break down below this level right here, and things aren't looking as well as they did on Friday. And let's rebound to the upside where we thought maybe we could push this price higher and see some sort of rally in the dollar versus Canada. Not to be, we started to move back below, like I said, this swing area here, and we're going to be paying attention this swing area right here between the 128.37 and 128.42 level. Move below that level and then below the double bottom, and things are not looking all that great. On the top side, we're going to need to move back above the 128.58 level in the short term and stay above that level, and then get it back above the 100-hour moving average. It becomes more and more difficult to do that after you have the break. So I'm not all that positive about the pair, but nevertheless, we do have good support on the downside. So we do need to, there is a possibility that we could move back above the 100-hour moving average and push this pair further to the upside, but time will tell, and it doesn't look good right now. My name is Greg Michalowski. Good fortune through trading today. Bye-bye now.